Gradually people are getting convinced that mutual fund sahi hai, but they are as much tempted about buying that home, making investment in real estate. Listen, you have heard all the story. Bought something for 5,000 and actually it became 5 lakh rupees over some time period. But you don't see it in context. Learn the key difference between real estate and financial investment before you invest.
Hello and welcome to Investors Hangout. This weekly introduction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, zeroing in on an investment option is certainly a tricky task. While real estate comes across as an enticing prospect with magnified returns that property can get you, lots of stories about them floating around. But when new investors think about mutual funds, I'm sure it's the statutory warning that rings in your head. The one that says mutual funds are subject to market risks. So today we'll help you out of that dilemma and help you decide which investment option is a better choice for you, mutual funds or real estate.
Whenever you are investing, you should look at 5 variables about any investment. What is the risk? Can you lose your capital? Or your capital is going to be largely protected. It can never go down in value, or it will go down in value. It can go down in value temporarily, or if it goes down in value, it can go forever. Things like that. So what is the risk and why? And then comes return. How much will you get for the risk that you're assuming? And generally speaking, if the risk is low, then you tend to get low return. If the risk is high, then sometimes you are likely to get high return, but the downside is that risk is high, which means once in a while you will also lose your money. Then comes liquidity. In case of need, how soon can you realize your capital that you have invested? Then comes taxability of it. Whatever return that you realize from that investment, how it will be treated. Will it be treated as income? Will it be treated as capital gain? And accordingly, taxation rates will apply. Then comes, one most important thing is its ability to beat inflation. There are investments which can beat inflation. They are designed in a manner that they can beat inflation. So these are broadly 5 variables which you should look at. But one of the most important thing is the ticket size. What is the amount of money that you need to participate in that? For example, when it comes to mutual fund investment, you can start your SIP with 500 rupees. But if you want to buy gold ETFs or bonds, then the minimum unit of a gold bond is the worth of 1 gram of gold. Or likewise, if you have to buy a house, the minimum ticket size could be anywhere few lakhs to many lakhs or few crores. So you have to really decide that what fits in your frame of mind, frame of your scale of things, and plan accordingly. There are different ways in which you can invest in real estate. One is that you can buy a piece of land, or you can buy a flat, or you can buy a real estate investment trust. It's a financial instrument where when you buy a mutual fund, the mutual fund invests in stocks, shares, or bonds. Here is a fund which buys real estate, and it has 2 kind of income. One is that fund which holds these real estate, it can sell those assets, and if it does not sell, then the commercial real estate is normally yielding a good rental. So that is your earning. That is what you keep getting on an ongoing basis. And once in a while, that fund will sell those assets, and it will realize that capital value realized will be much more than what it was paid for. So that will be your gain. So that is how real estate investment trust works. Now, coming to what is it a good investment, or what are the pluses and minuses of real estate as an investment? I'm talking of the real estate investment that you make if you buy a piece of land or buy a flat. One is that it's the biggest advantage is that the emotional comfort of living in your home. Then second is that ability to be able to save on the rent that you have otherwise paid. And third is that you get some tax break on the interest component of the home loan repayment that happens. The biggest disadvantage is that normally the ticket size is ticket size is very different. If you want to invest in a mutual fund, you can do it with 500 rupees a month SIP. If you want to do a recurring deposit, you can do it with any similar kind of thing. But when it comes to buying a house, it will be a big ticket thing. It will be few lakh to few crores, and you end up borrowing money for that, and that's why you incur interest. Second is that, if you hold a real estate and you are not living in it, if you have a property, then you have to make sure that you continue to possess it and somebody else is not actually abusing it, misusing it, or capturing it. It is not a financial investment. Only one component, real estate investment trust, is a financial investment. But physical real estate is that if it is real, then you have to take care of it and worry about it and make sure that nobody steals it or nobody abuses it. Third is that liquidity. You can't realize money at will. If you want, you have invested your money in this house and suddenly you need that money. Can you get it in 48 hours? No. The real disadvantage of mutual fund is that you incur an expense. Besides that, many categories, all equity linked investments, are reasonably volatile. Sometimes the long-term bond funds are also, they can be subject to decline in value, which most people are not used to. You invest in a bond fund and it goes down in value simply because it has invested in long-term bonds. And if interest rate goes up, they go down in value. So many investors have to reconcile with the serious steep ups and downs of these funds. And one of the biggest advantage of mutual fund is that realizability. Whenever you need it, you can get it in any time. Sometimes some funds, they provide you overnight realizability. You invest in a liquid fund, you get your money next day. You invest in an equity fund, it is T+3. So the day you redeem it before 3:30, you will get your money in 2 days' time. So your ability to get your money back, and more so in times of urgent need, is very much possible. Besides that, you can borrow against a mutual fund. You don't necessarily need to sell it, assuming that you need money for a small period of time. You can mortgage your fund and get your money in about anywhere between half an hour to 2 hours. The whole process is now digital. Many people provide this service. So that is another advantage. So realizability and ability to have money against that. Which one to choose? I don't think it is a matter of me advising you what you should choose. If you want to buy a house, that's a different decision. If you want to invest in a house, that's a completely different decision. I would say that most people should buy a house if they can afford to pay. If 1/3 of their income can go into paying repayment of that EMI, that the money that you will borrow against it for buying that house. If you can do that, and if you are incurring rental expense, if you are spending money on paying the rent, then you should buy it. You should consider buying it, and it is not an investment for now, all your life. Till you think in terms of selling it and upgrading yourself to another house, it is not an investment. It might go up in value, is a different story. It's your home where you live. And then comes, the second home, or the one home which you will buy just because its value will go up and then you will sell. That is your investment. Based on this, I would suggest that buying the second home situation arises only when you come across a special situation. You come across a house which is being sold. Somebody is desperately selling it, and in his desperation, you are able to strike a great bargain. Maybe you should consider buying that. But except for that, all kind of disadvantages, maintaining it, keeping an eye, making sure that you have the time and inclination and resources to keep it alive, keep it well maintained, well kept, and looking for a tenant and doing the documentation and not worrying about it. And then you have that big ticket of investments with which you can make one investment. So that's a disadvantage. If you want to keep it very simple, realizable, optimally growing, then choose a mutual fund. It is very simple.
That's all we have for you in today's episode. Keep watching the space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.